Hello traders, so in this lesson we're going to talk about double liquidity sweep. So what is a double liquidity sweep? As you can see, you have your swing high and that swing high was broken. So what do you think retail traders are thinking? They're thinking that price is going to continue to the upside just for price to reverse and come back inside of the range. So what happened here? What happened here is that the buyers were trapped. Anybody that thought price was going to go to the bull side got trapped and price reversed them. So now look at this swing low. What do you think retail traders are thinking? They're thinking that price is going to continue to the downside. And now sellers are coming in the market just for price to reverse and come back inside of the range. So now what happened? Sellers been trapped just for price to continue the opposite direction. So the idea behind a double liquidity sweep is that you have your swing and now you have a swing being broken. So what happened here? What happened here is that retail traders start thinking that price is going to change character and sell orders are coming in. More sell orders are coming in and so on, so on. For price to simply do what? Come back inside of the range. Forming what? Forming your purge, which in this case, who's being purged? The sellers. All the sellers that tried to sell the market, their stop loss has been taken. Now price goes the opposite direction. And what happens here? Once this swing high is broken, now you have buyers coming in the market, thinking that price is going to continue higher. So now you have buyers coming in the market, and so on, for price to eventually do what? Come back inside of the range, forming what? Your buyers being trapped. Now your buyers are trapped. So now let's say this sequence right here occurred in a bullish trend. So where would your entry be? So you have two options. You can trade a reversal or you can trade a continuation. A reversal will be pulling out your fib and taking an entry at your retracement right here, which would be your bottom quarter. This will be your reversal entry. Now your continuation entry would be right above the buyers being trapped. And we're going to cover this in greater detail. Before you proceed, please make sure you hit the like button and leave a comment. This will help us to continue giving out these free lessons. So a double liquidity sweep will usually occur in two scenarios. First one would be your reversal, which would be your macro change of character. You see you have a downtrend. And now what do you have? That swing being attacked, changing the direction, which would give people the indication that this is a change of character. And what happens next? Price goes against that change of character to clear out liquidity before actually changing the character. Okay, so let's ask the why. Why does it occur when price is about to change character? So let's say you have a bearish trend right here. Price is in a bearish trend. And what happens here is price breaks structure. So what does that tell us? When price breaks structure, in majority of cases, especially when it comes to your change of character. Once price breaks structure, you expect a retracement back inside of the range to grab an internal liquidity order to continue to the upside. This is your basic change of character. But the reason for a double liquidity sweep, it's basically a double trap. So your basic liquidity sweep is just a single trap. Now this is your double trap. So now that you have this break of structure, you're anticipating price to come to this level so you can take it to the upside. But in this case, price would take out that swing low. By taking that swing low, what did price do? Price took out the sellers and the buyers before actually changing character and going to the upside. Let's look at an example. So let's take a look at this example. So you have your range right here, and prior to this, price was in a bullish trend. Price was in a bullish trend. So now that you have this break of structure, what are a lot of retail traders anticipating? They're anticipating a retracement. So a retracement somewhere around here. Let's say this is your average smart money entry. This is your average smart money trader then trying to take an entry at an extreme. Now, let's look at what price does. Price broke this level and came back inside of the range. So what happened here? You had a seller trap right here, and you had a buyer trap right here. Why did this trap occur? Because we need to take out all the smart money sellers as well. You have smart money sellers right here. They need to get purged. And then you have all the retail buyers right here that need to be purged as well. So a double liquidity sweep takes out both smart money and retail traders out of the market. So where will your entry be? Your entry should be right below your seller's trap right here. And where would your stop loss be? You can have your stop loss being half the range, or you could look at a high resistance level, which would be somewhere around here. And this could be your stop loss. And when are you entering the trade? You're entering the trade once price gets to this level. So let's make this line golden. And once price gets below this level, you can take price down. So let's talk about your double liquidity sweep when it comes to a continuation market. So price is in a bullish trend. And what happens here is the price would go take out that low in a bullish trend. It will take out a swing low, takes that swing low, and breaks that swing high. Once it breaks that swing high, now you have either your retracement right here, where you will get in a retracement entry, or you'd wait for price to take out this swing high and have your entry right here. And the same thing would go in a bearish trend. So let's say you have a bearish trend. You would wait for price to take the opposite swing, which in this case would be your swing high, and then come back down, take down the swing low, retrace, and then break. This was your swing high being taken. Post your swing high being taken, which is your opposite swing. Now you have your swing low taken. Now you have your retracement. And you have your entry below your sellers being trapped. Be right here. Here's an example of a continuation double liquidity sweep. So here we have our range. What are we waiting for? We're waiting for a sweep. So now we have our liquidity sweep, which in this case would be our sellers being trapped. So now we have our sellers being trapped. So what are we waiting for now? We're waiting for now our buyers be trapped. Now, what do you have? You have your buyers being trapped. So what's the next step that we're waiting for? We're waiting for that retracement. Once price retraces and comes back to take out our buyers. And this is where our entry would be. Now we have our rejection. And we have our entry, which is right here. Our entry would be based off momentum. And our stop loss could be at the 50% or again at a high rejection point, somewhere where price found trouble. Hope you guys enjoyed this lesson. Make sure you visit the website for more exclusive lessons and make sure you like this video, leave a comment, and subscribe to the channel. Till next time.